Have you ever wondered which actually performs better, dividend stocks or growth stocks? I've been investing in both for a while now, and now that I've looked at the numbers, I've got some thoughts. Welcome back to the Daily Dough. Today we're comparing two popular ETFs, SCHD and SCHG. Back in late 2022, I started buying SCHD. Honestly, part of it was the hype. SCHD was everywhere. I was just getting into investing and it felt like the go-to pick for dividends. It had a strong history, reliable companies, monthly income. Really, it checked all the boxes, and I liked the simplicity of it. But as I kept learning more about investing, I started to realize how important it was to diversify. So even though I'm still a big fan of dividend stocks, I knew I needed some exposure to growth as well. So about a year later, I started buying SCHG. So now that I've held both for a while, how have they actually performed? Has one clearly outperformed the other? Well, here's how SCHD has performed. So in total, I've invested $11,170 since September of 2022. As of June 2025, it's worth $12,029.50. So that means I've had a total gain of $1,589. About $858 of that has been from market growth and $730 from dividends. As you can see, a good chunk of that return has come from dividends. And for a fund like SCHD, that income stream really pulls its weight. It helps push the overall returns higher. Now, SCHG is a different story. I started that position in July 2023 and put in $9,794 total. As of June 2025, 23 months later, it's worth $13,291. That's a $3,564 gain, with only about $66 of that coming from dividends. Honestly, this kind of result makes sense. Growth stocks just have way more room to grow than dividend-focused ones. However, what I didn't expect was to see such a big gap this quickly. I figured it would take years and years for a difference like this to show up. But looking at the numbers side by side, SCHD has returned 22.7% overall, whereas SCHG more than double that, 53.27%. Honestly, this tracks. Growth has historically delivered higher returns over time. But with dividend-focused ETFs, you usually see less fluctuation. So really you're trading growth potential for lower volatility. But what I've realized is you don't have to choose a winner. Each ETF plays a different role, and when you give them time, they can actually complement each other. One gives you steady income, the other one gives you growth. If you've enjoyed this video and you want to follow along as I break down more of my portfolio, make sure to subscribe. In the next video, I'm going to compare two other ETFs I've held since the same time, and this one might surprise you even more. But I'm curious, do you lean more towards dividends, growth, or a mix of both? Let me know in the comments down below.